Good morning, everyone. Hi, I'm Tim Lizotte, your host, as well as the CEO and Managing Director of Green Life Capital. Just a brief introduction about Green Life Capital. We're a private money financer and advisor to family offices, hedge funds, ultra high net worth individuals, private wealth, and we have over $500 million to deploy in commercial real estate, working capital, and business loans. But more importantly, I want to thank you for taking time out of your day to join us here today. A little bit about Linked Ventures. Linked Ventures is a global platform that showcases emerging growth companies to active investors. Through a combination of our website, events, and customized service, we provide opportunities and tailored matchmaking between private companies and investors. Private companies are able to showcase their company to potential investors or CEOs that are seeking acquisition targets, and investors are able to review and connect with deal flow that has gone through our vetting process. Today, we have an exciting lineup of CEOs and industry leaders who are seeking capital presenting to our audience of investors. We have audience members from all around the globe. These companies that are presenting today are emerging growth companies in various industries, including advertising and ad tech. We also have today here with us agriculture and legalized cannabis. We have health and wellness, body care and pain management, and real estate. I'm joining you from Las Vegas, Nevada, and we have participants, again, like I said, from around the globe in various time zones, and some of them stayed up even all night. We had one from Thailand coming in from Thailand. It's 2 a.m. in Thailand. So whether it's sunny or dark, early or late, thank you for joining us here today. I'm going to walk you through our schedule and go through some housekeeping. All of the times that I mention are going to be in Pacific Standard Time. I have posted in the chat the schedule for today. The presentations will immediately follow this brief introduction at around 11:10 a.m. The full schedule, again, has been posted in the chat. It will also be available online at Linked Ventures, the Linked Ventures website. That's linkedventures.net. So today we have presentations from 4 companies that are raising capital. We initially scheduled 5. Unfortunately, due to health reasons, we're only able to showcase 4 here today. So after each presenter has finished their presentation, there'll be an opportunity for the audience to ask questions. Each presenter has approximately 25 minutes for their presentation, which includes the question and answer. You have a question and answer at the bottom of your Zoom app. You can use that, not the chat. Please use that. There's Q&A down at the bottom of your Zoom app that you can use to type in your question. We will try to look at the chat as well, but please use the Q&A. That's how you indicate to the panelists there's a question. I will read the questions out loud, and the presenter will be able to answer them audibly. The chat has been enabled if you haven't noticed. Please don't abuse the chat with inappropriate content or spam. We don't want to have to remove anybody, but we're all professionals here. During the webinar, we're also going to put up a survey, a poll to get your feedback on how we're doing. After all the presentations have been completed, we'll also have another poll where you get to be the judge, and you can tell us who delivered the best pitch today. There's really no prize for winning best pitch, but it does come with some sense of pride and validation for the presenters here today. It's not easy to give a presentation going deep dive into your business, and also to ask strangers, some of them who you might not have met before, for money, especially in front of a large audience that you haven't met. So I want to thank our panelists today for putting all the hard work that they did into their presentations. They've worked very hard. Also, after this webinar, there's going to be a networking meeting. It's going to be from 1 p.m. To 2 p.m. Pacific time. It will be a separate meeting. You'll get a link in the chat. Please don't click on that link too early. Otherwise, you'll leave this webinar and you're going to go over to that networking meeting. Again, we want to thank you for taking time out of your day to attend. And we hope we are providing you with enough value that you'll consider attending some future events. Contact information. We get this question asked a lot. Contact information and offering information and videos from our presentations will be posted on the Linked Ventures website. That's linkedventures.net sometime next week. So we encourage you to visit the website for the most recent updates. It is now 11:10. How did I do on that? I guess I hit it right on the nose. I wasn't expecting that to happen, and I had my little script here. So, guys, I'm just like you. I'm just a human being, just like everyone else here. And so our first presenter is Mike Bray. He is the president of Deep Roots. Deep Roots is a recently licensed cultivator, manufacturer, and wholesaler of craft cannabis products to rapidly emerging Massachusetts recreational cannabis market. So after 2 years of preparation, they positioned the company to fill the void for the craft cannabis products in the state. And they've signed up 15 high-end dispensaries. They've already joined Deep Roots as a partner network, which is twice as many would also like to join. But I don't want to steal all of his thunder. I'm going to let Mike Bray take it from here. So, Mike, you are first up.
All right. Thank you very much. My name is Mike Bray, and I am the president of Deep Roots Craft Cannabis. Deep Roots is ready to fill the void of high-end, craft quality products in the emerging multi-billion-dollar Massachusetts cannabis market. Our business is cultivating and producing branded cannabis flower, infused edibles, and concentrates. We will be wholesaling those products to dispensary partners throughout the state. And right now, our entire focus is on the emerging Massachusetts recreational market. What separates us is craft. As many of you may well know, the demand for craft cannabis or high-end cannabis products is rapidly expanding in mature Western markets such as California and Oregon. Craft cannabis products such as those are not available here in the Massachusetts market yet, and we're poised to fill this void. What makes craft cannabis craft? Well, it starts with your flower, of course, and that is unique and stable genetics that have cannabinoid and terpene profiles that are widely varied. You need to be working with a manageable canopy size that you can give individual attention to each plant and ensure that you don't have any deficiencies or problems. Another thing that's very, very important is carefully hand trimming that flower. Many large volume producers are putting their flower through automated machines, and what you end up doing is losing a lot of the trichomes that hold the important THC and other cannabinoids. And finally, you need to dry and cure your products properly. If you do not dry and cure your product properly, like many of the high volume operators in the state right now, you end up with a brittle, dust-like product that is really not that enjoyable. So you start with that craft flower, and that's the base for all of our products. That includes our award-winning concentrates, small batch gourmet edibles, looking at and focusing on regional-based things such as saltwater taffies, and then putting those products into functional and beautiful packaging that keeps your product airtight, so it does not degrade over time, and it is that eye appeal on the shelf. And of course, as a wholesaler, we need to make sure that our products are being sold at reputable high-end dispensaries. So what are consumers looking for? They're not just looking to get high. That has been shown across the board. They're looking to be relaxed. They're looking for some kind of social connection. They're looking for enhancement of their daily activities. But right now, Massachusetts consumers severely lack the products that are meeting those needs, and they lack the knowledge to make those educated purchases. And that's where we need to step in. So what's the market look like right now? The Massachusetts market potential is at least Colorado's, which is doing $2 billion a year. We have a larger population. We have a significantly higher population density. Our average income is about $12,000 more. And just in general, we have a very overall acceptance of cannabis. As of today, through the first 20 months of sales, we've done $1 billion. So our market is growing explosively after a very slow, regulated start. At the end of 2019, we had 33 operating dispensaries, and in October of this year, we've gotten up to 82. And thus far, we've doubled sales, and that's even with a 8-week shutdown due to COVID. Our market is transforming rapidly. In 2019, I mentioned there was 33 operating dispensaries. All of these dispensaries cultivated and manufactured their own products that they sold. And they were also focused on medical. They were co-located. This year, we had about 50 more that opened up, and many of those were recreational only. But what you can see is that the companies that have now been licensed but have yet to open, 50% of those do not cultivate or manufacture their own supply. So they're starved for product. And before too long, it's estimated that we're going to have around 300 dispensaries in the Commonwealth. Supply is extremely constrained right now, as opposed to out in the Western market where the market's flooded. Cannabis is selling for around 3 times what it is selling for out West. Just last week, the average wholesale cost of a pound of cannabis was $4,100. The demand is there. As Tim mentioned, we have signed many dispensaries. It's actually 19 as of now that want to carry our products and have indicated a certain volume that they'd like to carry. That's allowed us to sell everything that we can, to pre-sell everything that we can produce for the first 2 years of operation before our planned expansion. This is our partnership network here. And as you can see, we have a pretty good footing across the populated areas of the state. The eastern part of the state is significantly more populated. We have a presence in the major cities such as Boston, Worcester, and Springfield. And our focus is on border towns because right now those are the highest volume. To the south, we have Rhode Island and Connecticut, which have both yet to legalize recreational. And to the north, we have Vermont and New Hampshire, both of which are in the process but have yet to get rolling. And to the west, New York is in the same situation. So our focus is on high volume, high end retail outlets. Our team, we've put together a team of experts in every area to run the business, in management, strategy, marketing, cultivation, production, operational, physical, and IT systems. Our CFO, George, is a Harvard MBA. Our production team of Tim and Henry, they're very well respected in the community here in Massachusetts, and actually Henry just last week won both first and second place for best concentrates in Massachusetts at the annual Harvest Cup in Worcester. So what we have done, we built a leadership team with outstanding business, operational, and product expertise. We've raised $750,000 to get us to the point where we are now, which we've perfected our sophisticated business plan and enterprise model. We've occupied our facility and obtained all required municipal approvals. That's quite a stumbling block for a lot of companies because the requirements vary significantly, even throughout the Commonwealth itself, with each municipality asking for different things. We've acquired an option to purchase the land that surrounds our facility that's going to allow us to expand our cultivation. That's just under 12 acres of land. We've developed industry recognition and market presence through our social media marketing, our in-person at events, and so on. As I mentioned earlier, we've attracted strategic partnerships with 19 high-end dispensaries that have signed the dotted line. We have another dozen or so that would like to work with us. However, until we expand, we're not going to be able to supply all these individuals. And most importantly, we obtained our license in July that will allow us to produce and wholesale recreational cannabis products. So what's coming up next? We have a 6-month build-out process, which will be followed up immediately with 3.5 to 4 months of cultivation and processing that will allow us to commercialize in September. By October of 2022, we look to expand our cultivation from 5,000 square feet of canopy all the way up to 25,000. And then after that, we will leverage our brand recognition to sustain growth through things like a social consumption lounge or other ventures. A little bit about our financial situation. This coming year, as I mentioned, we'll be getting commercialized in September, which will allow us to do about $5.5 million in revenue. And that translates to $2.2 million in profit that over 5 years will grow to 51 million in revenue and 27.5 million in profit after taxes. So this is what we're looking for. We need a grand total of $5 million to commence operations. So our offer is for a $2.5 million investment in our company, which is 10% of our total fully diluted shares at $125 a share. We'll be leveraging that with between $2 and $2.5 million in debt financing. And as you can see on the left here, we've broken down the requirements to get started. And what does that mean for an investor? We're looking at an internal rate of return of 38%, a 5.2 time return on your investment. Currently, we have a $14.8 million net present value with a cumulative dividends of $9.7 million over 10 years. And the break-even point comes in about 3 years. So that's what I have here, and I'd be happy to take any questions.
Excellent. Thank you, Mike. That was an excellent job you did. We're waiting for some questions to come in. As I see that we have several attendees here that have already been making some noise in the chat and made a lot of comments about the business itself and a lot of great things that you're doing. I saw some mention of the great partnerships, which is obviously, that is a huge difference maker. Not a lot of companies can come out the gate, build partnerships. The Massachusetts market is a strong market in your space. I know this because it's surpassing Nevada very quickly. We were close to that $1 billion mark in the Nevada market. The billion markets are the ones that are in the billions are Washington, California, Colorado, Nevada, now Massachusetts. I think Michigan's going to be there, Chicago, or not just Chicago, but the whole entire state of Illinois. So there's a lot of growth in the industry. As we're waiting for some questions.
I see there's a question in the chat there.
There is a question.
I'd be very happy to answer that question. So that's something that we have definitely thought about. Although,
Mike, let me just read the question.
Yeah, absolutely.
The question, so the audience can't see the question yet. So the question that you're referring to, is that the valuation question, Mike?
The multi-state operator question.
Okay, great. So that's in the chat.
Yeah.
Mike, do you want to read the question and then answer the question? That I'm not seeing that question.
Absolutely. The question is from Shane, and he's asking, have you thought about becoming a multi-state operator? So that's something, that we've seen a lot of the multi-state operators really struggling with the difference in regulation between state to state. It seems to be a major problem. You see the headlines of these large MSOs that are just hemorrhaging money, and that's the reason. The requirements are way too different from state to state, and it's not just reporting requirements. It's also things like the kind of nutrients you can use, the kind of pest management plans that you can use. It goes that far down, and it makes it very difficult to have a conducive operation. So, it's something we've considered. We're thinking about it more regionally as time goes on, but right now we're 100% focused on Massachusetts.
So, Mike, there's a question that just came in here from Ulysses, and the question is, can you repeat the valuation again? Can you talk about your valuation?
Yeah, absolutely. We're valuating ourselves at $25 million. That is I can actually pop right back into that if people would like. Let's see here. Yeah, we've valued ourselves at $25 million. It's through the discounted cash flow model. Our CFO, George, would be more than happy to answer a lot more specific questions about financing and the networking. But we valued ourselves at 25. We believe we can hit 50, but that's going to require us our full expansion. So there's the reason for that valuation.
Very good. And there's another question here coming from Bianca. The question is, how do you plan to maintain your position in the Massachusetts markets as more craft cannabis companies become licensed and operational?
Well, see, the beautiful thing about that is that right now we have somewhere around, I want to say we're close to 1 million square feet of cultivation going on in Massachusetts, somewhere in that range. And none of it's all high volume. So it would take quite a bit for the craft market to be flooded. We're not going into this expecting that we're going to get a higher wholesale price because we're craft. But over time, as the overall price drops, we see us having the ability to retain some of that margin.
Excellent. Another question here coming from Scott. The question is, how many contracts did you say you had, and from a baseline, and how much is your sales baseline?
Yeah, so we've signed 19 dispensaries, and they really all vary. We have some dispensaries that have 5 checkout stations, and we have others that we've signed that have 20 checkout stations. So they're very large. So the average order is looking like around 25 pounds of flower per average dispensary, 1,000 grams of concentrate, and 1,000 packets of 100 milligram edibles per month. So the average order per dispensary that we've signed is in the range of 150,000. Now, I do want to stress that as we come out of this, we've signed 19 dispensaries, but at that level, at 25 pounds per month, and the other numbers I mentioned, we really can support 8 to 10 dispensaries. So we're going to have to be very selective about where we decide to launch our brand, and then those other dispensaries are very well aware that over time they'll be able to not only bring in more products, but also we'll be able to expand our network a little more.
That's a good problem to have, Mike, to be selective, where you're actually being selective on to which dispensaries are there. Can you talk a little bit more about that, the sort of the brand strategy of being that premium craft cannabis? And I want you to, if you could discuss that a little bit. I know we've had a little bit of conversation about that.
Yeah, absolutely. So, our dispensary partners, I'm sorry, I was actually reading the Q&A. Can you repeat that?
Sure. So you talked about, more, it's a good problem to have, that you have to be selective. You have more demand than you can actually fulfill. And so you're going to be a little more selective with the dispensaries that you're actually in. And that's also part of your brand strategy, to be that premium craft cannabis. So can you talk a little bit more about that strategy and how you plan to maintain that strategy?
Yeah, something that's very important for us is, we mentioned how we're going to be selective with the dispensaries. So that doesn't just mean what the dispensary looks like. It doesn't mean that's just the foot traffic. It means they need to be sure that they're making their bud tenders available to us so that we can educate them on our products. We need to make sure that they're going to allow us to come in there once, twice a month to do pop-ups and have face-to-face interactions with the consumers. And here in Massachusetts, you have to have 2 people in all delivery vehicles at all times. So the way we envision that is we have 1 driver, and it'll shift every time. 1 week it may be our head of cultivation that goes on the delivery to do the pop-up. The next week it could be someone from our kitchen who specializes in making chocolate that's going, so that they have the actual experts that are there talking to the individual consumers in the retail outlets.
Excellent.
So let me see this.
We have a couple more questions in the Q&A there, Mike, and maybe you could just indicate there's a couple of them for you. And the question here from Scott is the ROI that you discussed earlier, is that based on the 9 dispensaries?
No, that's based on what we can produce in our facility. And then again, after 2022, what we can produce with our expanded canopy.
Excellent. So it's based on total production. And as you mentioned, the total production is already pre-sold for the next 2 years.
Right, right. And one thing I did fail to mention is that we are able, our license type allows us to buy up to 2,000 pounds of third-party biomass. And that's going to allow us to boost up our, for example, our edibles. You know, we don't have to use our premium flour, you know, because a lot of that trim or even popcorn or even some of the bee buds will be going for concentrate products. So, you know, it's not quite as important to have a very craft flour going into your edibles. You know, you're pulling out the THC, you're pulling out the, you know, your full spectrum distillate.
Excellent. Now there's another question here, comes anonymously. So how do you plan to condition the undereducated Massachusetts market? And maybe you can talk about, you know, that education process. What does that mean to be an uneducated Massachusetts market? So there's a lot here. There's a lot of meaning.
Yeah, this is a good one. I could go for about 2 days on this one, but let's just make it. Let me give you an example. We've had a dispensary that was a potential dispensary partner that told us, we are only going to buy something from you if it has at least 25% THC. You know what we said? You're not the right outlet for us. Because that is what folks know right now. They're looking at THC percentage. They're not looking at your terp profiles. They're not looking at your rare cannabinoids that are in there. You know, one of my favorite things that I'd love to bring to the market is land-raised sativas. Now, many people aren't familiar with that, but a land-raised sativa, as opposed to a hybrid or an indica dominant flower, typically takes around 3 times as long to flower out and finish. So right now, that market is not going to pay 3 times the price for a land-raised sativa flower. However, that is a very, very, very different experience than your hybrid or your indica dominant flower. It's very euphoric. It's very energetic. I mean, I've gone on hikes where I did a 3-peak 10-mile hike and I was smoking joints the whole time. And it's because it's so energetic. It's just a very different thing. And so that's something that we need to do. You know, we need to start educating people about that. And maybe that means that we grow at a 12, 13-week flowering sativa rather than a full 25-week flowering landrace, to start making people understand what they're missing out on. And that's going to take time, but education is very, very important. And that's through social media, through influencers, through our pop-ups, and just about as many, and all the, of course, the in-person events once the plague's done.
Excellent job, Mike. We do have to move on to our next presenter, but if you want to learn more about Deep Roots, we'll have their contact information on the site as well. We also do have the networking following this webinar. They will be in the networking, so please join us in the networking, and you'll receive a link to that networking meeting in the chat later on. We also will have an opportunity So you'll have an opportunity to meet with them and learn more about them. And like I mentioned before, videos from today's presentations will be available on the Link Ventures website. So again, thank you, Mike. Thank you for your time here today, and thank you for your great presentation. So with that, our next speaker up is Jonah Tuckman, is the CEO of eBumps. eBumps is a company that's based out of New York, and they're developing a new advertising platform for the 21st century. They provide companies with the opportunity to advertise on their revolutionary platform, which is unlocking location-based advertising in the real world like never before. And by offering space on their eBump to advertisers, drivers can get paid for driving that they already do while supporting brands and missions that they believe in. Again, I hope I didn't steal too much of your thunder, Jonah. We're looking forward to your presentation. Jonah, it's all yours.
Great. Thank you, Tim. And really thank you everyone for being here today. I'll share my screen quickly. All right, great. Great. Well, thank you, everyone. My name is Jonah Tuckman. I am the founder and CEO of eBumps. eBumps serves an $8 billion marketplace where there are currently 227 million licensed drivers who currently don't monetize their space. When founding this company, we were identifying a problem in the current advertising space, where we saw that out-of-home advertising campaigns as of now have a difficulty in tracking a return on investment. And similarly, they lack liquidity. And then for the average person, there's a difficulty in monetizing their personal space. For this reason, we founded eBumps, in which we created 21.5-inch LCD screens that we mount to the passenger side door of a vehicle that faces the sidewalk. We have understood that we can collect roughly 15,000 to 20,000 impressions per day when we're in highly concentrated cities. And through these screens, we've built a proprietary software and advertising platform that we allow advertisers to run targeted ads and data collection through. Because it's a complex and new idea, we've put together a short video that explains it nicely.
eBumps is creating a completely new ad space, allowing drivers to be paid for work that they're already doing. We give advertisers the insight associated with digital advertisements and the attention-grabbing flair of outdoor ones by allowing them to advertise on the fleet of cars already filling the streets. Users can evaluate their ad campaigns in real time and see when and where people are interacting with them. This gives everyday drivers an additional source of passive income. By displaying our ads on your car, you get paid for the driving you already do. In an ever uncertain world, eBumps provides exciting new opportunities for everyone.
So we've identified the market size here to be roughly $260 billion spent every year in US advertising, $8.6 billion of that being in outdoor advertising alone, and then $181 million being in digital out-of-home advertising alone. This being a number that's rapidly increasing, as you can see in a lot of different reports that are coming out now. Our market share of this, through some pretty conservative projections based on a short growing of our product on cars, as well as a not fully encapsulated advertising selling, we would see roughly $51 million in 2024, which is far less than 5% of the total market share. Our business model is based on the selling of CPMs. Essentially, in the advertising world, you can buy what's called a CPM, or a cost per mil, which is how you correlate 1,000 impressions. And our screen's based on facial detection that we run, and similarly through partnerships with companies like Street Metrics, we have an ability to count the number of people that our screens pass and thus sell back impressions to advertisers for the advertising campaigns that they run. As of now, we've filed a provisional patent, and similarly, we've put together strategic manufacturing partnerships such as AUO, a company based in Taiwan who specializes in LCD manufacturing, who also builds the screens for companies like Samsung, and Tech Global, a company based in Chicago who works on system integration for companies like Delta, 3M, and Motorola. Our competition are companies like Grabit, Firefly, and Halo, all of which being large and bulky permanent fixtures that require professional installation. Our screens are different because they're low-cost LCDs that don't require professional installation and are not permanent fixtures. Similarly, our screens are more so directed towards the general market, not solely rideshare, and thus they allow for a higher amount of mass adoption, both on the driver level for that reason, and similarly, our advertising system is open to the public, which allows for small businesses to run ads on our campaigns as well. Our go-to-market plan to begin with is based in New York City, where we will be identifying drivers such as taxis, rideshare, and similarly things like food trucks in Times Square. And we're doing this through guerrilla marketing and sales techniques alongside search engine optimization with our marketing firm. From New York, we then plan on expanding to cities like Seattle, Vegas, Austin, Chicago, Boston, and further. And then from there, we want to expand globally. As of late, we have received interest from a bank in Southeast Asia, where we will be expanding a subsidiary there and beginning our development for the Southeast Asian market. We've partnered with Marketing 360, a marketing firm who similarly represents the Denver Broncos, to take care of our marketing side, and have partnered with a company called ViStar Media, who works on programmatic advertising in the out-of-home space, meaning that anything not sold on our screens by our sales team will be filled by ViStar Media. For the agencies, alongside what ViStar puts on our system, we will have our sales team contacting advertising agencies through in-house and out-of-house sales. And then similarly, Marketing 360 will allow for search engine optimization that will market towards small businesses. Our founding team is myself, Cole Johnson, and Corin Rose. And as of now, we're raising roughly $2 million, which we will then use to deploy 1,600 LCD screens by year-end 2021, which will allow us for the further expansion within the United States to different cities and to see further adoption of our screens on cars. And this being just a short video that I like to play that our manufacturers had sent us. It's a screen under development, but it really conveys what we're trying to do. Great. Thank you very much, everyone. I'd love to take questions, and I think we have plenty of time for that.
Excellent job, Jonah. As we're looking for questions, again, I remind you for questions, you can put them in the Q&A, which is on the bottom of your app, and you type your question in, and we will read those questions out loud, and they will be answered audibly. So some people are putting them in the chat sometimes, but I remind you, again, try to use the Q&A at the bottom of your app. Now, the first question comes in, and I think this is a question that we've had before, but let's go ahead and talk about this, because I know we've had you here before, Jonah, and this question comes up from the audience usually. So the first question is from Shane. Where did Shane go? What if you just, okay, there we go. Just disappear. We're getting a lot of questions coming in here. So what if I just steal the screen from the side of the car? So how secure are these?
Yeah, no, absolutely. It's a really interesting question, Shane, because our really early ideas were rated, or were really based on this paradox of wanting to have our screens easily removable, so someone isn't making this non-ending commitment to advertise, but similarly to avoid exactly that, people stealing it. And actually our manufacturers have worked with this exact question before. They have built screens for the sides of bus stops, things like that. And so essentially there's a small key that goes into the screen, it locks it in. That in itself is not, something that someone with a crowbar won't be able to get off. But what it does do, and this is what they're really basing this off of through years and years of expertise in doing so, is they understand that it's the deterrent of having that key that keeps people away from it. Similarly, our screens do capture imaging of the sidewalk. And so if it were to be taken by someone that's existent in our system, if it's needed to be, And so we've thought very much about that, and we're pretty confident that that's not going to be a worry.
And following on that, so I think this is more of an insurance question. So obviously, you know, if an investor, they have a little bit of concerns here regarding the security of these, and what if there's an accident, a replacement cost. So could you talk about that? What if there's an accident, or, you know, would insurance cover that? Is there, what is the replacement cost on something like this?
Yeah, absolutely. So to both Kim's question and to the anonymous question, Kim asking about the security of the LCD screen. The security comes in twofold. First, everything that we do is regulated by our manufacturers. They work at a really high level, and so they understand that regulations need to be followed. And we have certifications on all of the screens and such. And similarly, on our software side, we have engineers who have come in to scrub everything down and make sure there aren't breaches. And we also are going to bring it out to a validator before doing anything, to make sure that there aren't any security holes and such. And then in terms of the insurance side of the screens, they are insured. And based on our business model, you know, the cost of a screen isn't overly substantial based on the revenue that it provides. So we do understand that there will be turnover with certain screens. The manufacturers have tested them very, very well. You know, we have videos of them putting it onto a door and then standing on top of it and jumping up and down. So they're certainly secure, but we always understand that there are unforeseen things that could come up. And so it's worked into our business model. They're certainly insured. And you know, they're as highly tested as they could be.
Excellent job as usual. So the next question here comes from Liz. Jonah, so you can talk more about the $2 million raise. Can you talk more about the terms and how you'll deploy those funds? So how will you use the money? I know you did mention this, and she wants you to talk a little bit more about the terms specifically. But I think as far as terms specifically, that's not appropriate for this forum. That's another discussion as we talk about terms specifically, because there's obviously some things that you have to do with Regulation D when you're raising money, when you start discussing terms in open forum. So maybe you can just kind of give us a little bit of an idea about that raise and how you'll use the funds.
Absolutely, yeah. So it will be a priced round. We brought in a mergers and acquisition firm to evaluate us. So they have provided us with a valuation, and it really comes alongside a doc that they provided us that really spells out the reasoning for their valuation and all of the things about that. I'd be happy to get it to you after this. In terms of what we plan on using these funds for, really our business model is based around expansion. And so once we have these 25 screens on the road, which will be here, we're hoping for second or third week of December. But again, with COVID, there's always the risk of a manufacturing delay. And so, you know, no later than January 1st, we will be deploying the 25 screens. And as I mentioned with ViStar, we already have ads to fill them. There will be a revenue stream the second they get on the road. And we are speaking with people in New York about putting them on their cars. We have a few who have said yes. Some of them being food trucks in Times Square, where a CPM is $200 to $500. Of course, those are for the billboards, but you know, we're allowing access at a much cheaper rate at our CPM of being 5 to 10. And so we understand where these 25 screens are going to go. And once we have the data to accompany that, it then allows us to open conversations, whether they be in New York or other cities with larger forums, whether it be rideshare companies, taxi companies, things of the sort, which then allow us to fill orders and then order the screens associated with that. And then from there to really see revenue streams growing as more screens get on the road. We love our screens. We think they're fantastic, but really they are just a means for our software. And so the more screens we have, the more places our software is running and the more impressions we are able to sell.
Excellent. I'm skipping over a few questions here. There's a lot of questions in the queue, so I'm trying to get to some of them. And one of the questions here that I kind of like, so I'm picking this for you, Jonah. What inspired you to come up with this business? And was this something that you just came up randomly or in business school? And then also, this is a two-part question. Talk about the advertising, because you talk about the drivers being able to choose advertising that they want to advertise. So the question here from series is, would you allow CBD or other things like that to be advertised? So the first part, if you wanted me to, what inspired you, and talk about the advertising that you'll allow.
So that's a really great question. For the first part, I actually founded this company when I was an undergraduate. I have it right here. Our first ever screen was this big. We built it out with some chips on the back, and we built it in a house that I lived with my CTO. Built it, brought it to investors, were funded to further expand the idea. And we had originally built this idea around an idea that that everyone has seen a lot, and we all have heavy foot traffic just from our everyday lives, but there's no way to monetize it. So we were reading about vloggers and influencers, and the highest paid YouTuber last year was 8 years old, and he made, I think, $28 million, something like that, because he has a handful of followers who watch him unwrap gifts. And so we started thinking about this idea that one of the most highly paying industries in the world, there isn't a blueprint to get there. It's all random. You can't go to school and study how do you become viral. It's random, and yet everyone has this space that they can monetize, and there's just no ability to be able to do so. And so our idea of ourselves is not that we are a car advertising company, but rather a personal monetization company. We want to allow people to start monetizing the space that they hold, so that they can start to monetize and see passive income coming in. In terms of, Tim, could you remind me on the second part? Sorry about that.
Sure. As far as advertising, what type of advertising would you allow? And can you talk more about, because I know you covered this, you talk more about how drivers get to choose the ads that really kind of appeal to them as well, too.
Yeah, of course. So our system, it's really interesting. What a lot of our competitors do is that they essentially just allow for programmatic advertising. And so if you are a driver and you put a halo screen on top of your car, it's just there, and the taxi company or Lyft will pay you a little bit, but it's just there, and you have no say of what's on it. And similarly, if I wanted to run an eBumps ad on that screen, I have no way to do so. Our system is trying to open that up to the public. And so if you're a driver, you can actually set your systems to advertise for what you want. So you can go into it and you can add priority for Black-owned business or female-owned business or nonprofits and such. And then if our system finds something with that similar tag, we see that it's prioritized, we put it on your screen. And similarly, you have the ability to blacklist things. So if you are someone who's very against the tobacco industry, for example, you could go in and you could say, I do not want to advertise for this, and blacklist it. And so the question there is, yes, we certainly allow for that. And it really just is up to our drivers. And of course, we've had the follow-up many times about how that could be restrictive to certain industries, and it absolutely is. But the thing is, it's more so a priority level. And so if someone is prioritizing certain industries, it's not that they will only get that, because we do need to give everyone a fair shot. It will just be prioritized in their advertising queue.
I have another question here that came in about expansion. This comes from an anonymous attendee asking any plans to expand to India, but other places, talk about that global expansion, are you open to that?
Of course. So I mentioned it briefly, and I probably can't get into too many details because it's still in the due diligence phase and such. But we are actually opening a joint venture in Southeast Asia that we received an investment on from someone who was really interested in bringing our product to different countries in that region. And so, yes, we are thrilled about international expansion, and we're always keeping our eyes and ears open for partners who can bring us to different places. Because of course, if I were to go to certain countries, there would be divides for it. I wouldn't have the same access to industries, as I'm not very well connected internationally, and so we need partners who allow us to do that. I know we're speaking to people in London right now about the same thing, and so it really just comes down to finding the right partners to be able to do this with us.
Excellent. There's just a ton of questions as always, Jonah. I know this is your third presentation with us, and each time, actually since the first presentation, the company has actually grown since September, the first presentation on September 25th, to the second presentation last month on October 22nd, to now. You've already grown just since that time. A lot's already happened, and there's been a lot of traction already happening. In the startup world, this is fast paced, and it's something that you've been able to handle really well. And so I know you're open to other partnerships and discussions, because that's part of the business model. There is to build these partnerships to expand the growth. But maybe you can talk a little bit more about the device itself. A lot of people. So I do want to clarify too. I know if you didn't catch this, the audience didn't catch this. eBumps they've got a device, but they're a software company at the core, right? You're a software company, right, Jonah? And the device itself is just a means to deploy the software. But there's a question about the device. How do you protect them from environmental changes?
Yeah, no, absolutely. We, as Tim kind of touched on, we've really made a lot of partnerships throughout this. And I think that's why we've been able to do all of this. I mean, we're 8 months old as a company, and yet we work with firms that don't work with startups. So when we started our work with AUO, they started by laughing us out of the room because they asked us if we would want 100,000 screens, and we said we wanted 25. And so we've really built ourselves well, because we've had some really great partnerships that we've been able to form. And so that's why our engineers over in Chicago, they have tested this as best as they can, and they are absolutely brilliant in what they do. So they've gone through all of the thermo side of everything. They've thrown it on cars and tested it in rooms, throwing things at it, changing temperatures, spraying water on it. I mean, they're brilliant. They're amazing at what they do. So in terms of the weathering and things like that, I really do trust the work that they've done. They're great at what they do.
Excellent. Thank you, Jonah. I think we need to move on to our next speaker. There are some other questions there, Jonah, and if you could do us a favor, if you want to get to some of those questions that are in the Q&A, you could type an answer in there to allow some of these other questions to be answered. And again, I remind you, if you want to talk more with Jonah, you can meet him in the networking following this meeting, this webinar. There will be a link in the chat. We'll put that a little bit later. You'll be able to go over to that networking and be able to talk to Jonah more. You can ask more questions. And the contact information also for Jonah will be available on the site at linkventures.net. And also the videos from this presentation are going to be posted sometime next week as well. So again, thank you, Jonah. Thank you for your time.
Yeah, thank you, Tim. And thank you, everyone, for being here.
Thank you, Jonah. Our next speaker, so we had a slight schedule change due to health reasons, and I want to thank the next speaker for being able to adjust on a very short notice. So our next speaker is Lawrence Taylor. He's the CEO and founder of Christina. Christina is a development corporation that is vertically integrated and a real estate sponsor and manager that was founded in 1977 and headquartered in Malibu, California. For more than 40 years, Christina has sponsored direct real estate investments in the West Side region of Los Angeles, which consists of Beverly Hills, Brentwood, Century City, Malibu, Santa Monica, Westwood, West Hollywood, Venice, Silicon, and the beaches area. Sorry for that. I'll let you correct that, Lawrence. And so he's been executing a proprietary and proven strategy, which is focused on tax advantage wealth preservation and long-term capital appreciation. Again, Lawrence, I hope I didn't steal all of your thunder. I'm going to give it over to you. We are looking forward to your presentation.
Thank you very much. And
Can you hear him?
am I being heard?
Yep.
Okay. Hey, thank you very much. No problem at all. And I appreciate the introduction, the opportunity to speak. Certainly, real estate as an investment class, as compared to those who have come before me this morning, is boring relatively. It's not new technology. It's not exciting. It's an asset class that's similar to a warm egg sandwich. It's tangible. It's what people want. It's what people love. It's what people care to have. And it's one of the things, because of the laws in the federal laws since 1933 and 1934, the Securities and Exchange Act, really made it impossible for millions of qualified investors to be able to own great real estate. And real estate, unlike other asset classes, is management intensive, and therefore most people who want it and want to feel something tangible in a world where non-tangible assets can disappear overnight or lose value, it's really an asset class that has endured for centuries, long before America became America. And so I'm here today to discuss our company and the investment opportunities we've created since 2013, since the law changed in the U.S. securities laws changed under Regulation D 506C, which for the first time since 1934 allows us to market the opportunity to own real estate in Los Angeles, in the West Side. We're calling in from Malibu, California, across the street from some of the wealthiest population demographically in the world and some of the most expensive real estate in the world. So this was never accessible before because we couldn't tell anybody about it. Under the law, you could not market as a security, a real estate security, without it being registered. And under the Jobs Act, which was passed during the Obama administration, and since has been law since 2013, the greatest aspect of that change was the ability to market the opportunity to invest with us in all 50 states. So I'm going to roll into, besides what I think most people understand about real estate and its tangible quality, but single most important thing times 3 is location, location, location. Real estate valuation is completely focused on where it is, not what it is, not what it does, not what the future looks like, but it's got to be great location. And so why Los Angeles? Well, Los Angeles is, for people who don't live in this area or who are not familiar with it, it doesn't have a central city core. It didn't grow as other cities have grown in the United States, with a central city core and everything being surrounded by it. The West Side region of Los Angeles, which is the closest to the coastline, consists of 5 different cities, and every city has its own set of regulations and development requirements and restrictions. And essentially, it's the most in-demand location if not in California, certainly in the United States and perhaps in the world, because we have the best year-round climate, and yet we're in a country that doesn't put an owner of real estate at risk from being from having the real estate taken from the government. I mean, we have a stable form of government, and historically, money comes in from all over the world to invest in the United States. And since the growth of China in the last 40 years, and particularly in the last 20 years, and because our ports are closest to the Far East and Asia and China, we're just beyond explosive in terms of the demand and the difference between demand and supply. So we're very, very focused in this market. We've never left the west side of Los Angeles. So the question is, why do it now? Well, it's never a bad time to buy good real estate. It happens to be a situation where there are better times and worse times, never a bad time. And right now, largely because of two things, COVID and COVID. Here's the negative of COVID, okay? The negative of COVID is buildings are empty, tenants aren't paying rent, landlords aren't paying their mortgages, and the world has changed. And the stay-at-home or work-from-home concept is going to have a material effect as we go forward. On the other hand, the good thing about COVID-19 is the CARES Act that was passed this year in response to COVID, which has created incredibly more beneficial tax benefits for owners of real estate than even existed prior to the COVID pandemic, and we expect more to come. So what we're seeing now and the expected changes in the estate tax laws coming in the Biden administration in 2021, 2022, we're finally seeing a lot of owners who never would sell their real estate to cut loose. And particularly in an environment where we can buy real estate at a discount from sellers that need to sell and want to sell, to be able to lock in the tax benefits that are available today that might disappear tomorrow. We also have lower interest rates than we've seen historically ever, and money is still available. So you combine all of those factors and you say, we've already got location, 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 and we are in the best markets, best real estate climate, best markets in the country. It couldn't be better. But like I said, it's never bad. It just happens to be attractive and getting more attractive. So after 43 years of operation exclusively in the West Side region of Los Angeles, these are areas that are worldwide known: Beverly Hills, Century City, West Hollywood, Santa Monica, Malibu, Venice, Silicon Beach, Playa del Rey, Marina del Rey. It's just endless. And these are locations that are known all over the world, where I've traveled all over the world. And if I tell people where I'm from, they go, Malibu, California. Oh my God, you're so lucky. Or Beverly Hills, or the Hollywood sign. These are iconic things. And they're iconic not just because they're worldwide recognized, they're iconic because it's where people want to be. So when you combine that with the ever-increasing demand from the entertainment industry, from the tourism industry, from the import-export business, and now technology, as we're stealing more and more business away from Silicon Valley and moving it down to Silicon Beach, where the weather is better year-round and the rents are cheaper, there's just a continuation. And why Christina? Because this is our playground, and this is the market that we know and that we operate in, and we know every square inch of the West Side, and we know what we can and cannot buy and why, and we don't need to sit here and do a detailed 10-year cash flow projection or build a model to figure out where it's going to go. For the last 43 years, it's only gone one way, up. And so, this is something that we particularly are known and famous for, and excited to be able to bring it out to a broader audience legally, whereas we could not have done so before under the restrictions prior to 2013. So, a lot of things that real estate provides that other investment classes don't, which are tremendous tax benefits. It came as a surprise to Congress, not really, but to many Congress members and the American public, that Donald Trump only paid $750 in taxes on who knows how many millions of income. The one that was really surprised is Donald Trump, The fact that he even had to pay $750 has probably pissed him off more than losing the election. And that's the whole thing about real estate. And this is a lot of people don't understand. Beyond the tangibility of just owning real estate, the laws that have been in place for years, which allow buildings that you buy that you think are going to go up in value, but for tax purposes, they depreciate, which means they lose value every year. And those losses taken against your income from the real estate, whether it's from a sale on a gain when you make a profit, or whether it's profits that you earn from operations, you never really pay tax because you use the depreciation and amortization to offset your income. And finally, you can infinitely refinance real estate and extract capital and never pay tax because loan proceeds are not taxable. Now, that only works if you buy the real estate right, manage it effectively, own it in the right locations, and have the ability to access those debt markets to be able to capitalize on the benefits that the government gives you. That's what you need. Most people can't get it. That's what we do. That's what makes us a great sponsor, and everybody needs a sponsor. So our Christina 4 offering, which is the fourth in a series of private equity real estate companies that we have been offering since 2014, is still open for investment. It's nearly fully committed. And the structure and the strategy is quite simple. You know, we have these private equity companies that own a defined number of buildings. And because there's a defined number of buildings, it's a closed-end company. Once it owns its properties, it's mining them for its upside potential, its income, and its tax credits, so to speak, or its tax losses. And so when an investor invests in Christina 4, a private equity company, and if they invest 5% of the total capitalization, which this is a $50 million capitalization, so it would be $2.5 million, you own 5% of the buildings that are in the portfolio. So since our first closing on July 1st, 2019, our first initial closing on capital, we've so far acquired 6 properties, 4 in one portfolio, which is the West 3rd Street Shopping District, which is adjacent to CBS Television City, the world-famous Grove Shopping Center and Farmers Market, and walking distance to the Beverly Center, Cedars-Sinai Medical Center, which is on par with some of the most exclusive medical centers in the world. And it's a fully developed, highest demographic count in the west side of Los Angeles, and the highest demographic count in the entire Los Angeles region. We bought these 4 properties called the Hayworths from a single family that developed them starting in 1959. They'd never been sold. They'd never been marketed. I just happened to know the family. And then the most recent acquisition is this property that we purchased on the beach in Playa del Rey. We bought that from the original owner, who's 96 years old, and decided to sell now while he knew what the estate tax law was, so he could know how much he was giving his beneficiaries instead of waiting until he died and perhaps having to pay more in estate taxes. It's the only building of its size and type that was ever built on the sand, adjacent to a public beach, and in probably one of the most accessible locations to all of the Playa Vista, which is a huge development on the former Howard Hughes property, which is now part of the core of Silicon Beach. And the rents are far below market because by the time this guy got to 96, all he cared about was keeping his units occupied. And this building could never be replaced because it was built 4 years before the Coastal Act, which precludes this type of development. So our plan with this is so simple. I mean, we own it. The rents are below market. The rents will go up. The property will do well, and we might convert it to stock cooperatives. And finally, there's one other project that we bought in West Hollywood, which is a new development deal above the Sunset Strip, which is world famous, and across the street from a brand new to be built Mandarin Hotel, which is currently in pre-development. And this project already has all of the permits and entitlements for construction from the city of West Hollywood, which took 9 years. We stepped into it after the entitlements were in place. So in a nutshell, what we're offering is something that's older than me and older than all of us. I mean, it's real estate. It's been around a long time. It's the sport of kings. It's for wealthy people generally. Most people have never been able to get into it. We offer it, and we offer you a tangible interest. You invest, you own a piece of the buildings instead of investing in a REIT, which is, you don't own anything except a tradable share, which may or may not pay you a dividend, gives you no tangible value. Or if you're lucky enough to know somebody to invest with, you know, as the world has been since the laws changed in '33, very few people have access to this type of opportunity. And finally, and you know, without having to emphasize it too much, there are very, very few sponsors that are actually out there today that have this quality and this track record. And as I said earlier, when we first started this, we've never had a loss. And our returns have been in excess of 20% per year on average for more than 40 years. Thank you.
Excellent job, Lawrence. You can tell you're a true expert in your field. And there's a lot of questions already starting to come in. And I want to just let everybody know, too, that we did just launch a poll survey to see how we're doing. And so continue to fill that out. But as the questions are coming in here, Lawrence, I appreciate you coming in. Also, just short notice and changing your schedule. I know you're a busy executive, and I really appreciate your flexibility at such short notice. The first question I want to put it from an anonymous attendee that wants to understand why does Christina take a long-term investment strategy on real estate?
Well, it's very simple. Our philosophy is if you have the lucky opportunity to buy great real estate, there's no reason why you would ever sell it. Because real estate rewards you for holding it if you happen to have the right location and the right sponsor. So that is not to say that we're going to hold a property for 20 or 30 years. What it means is that to extract the maximum value out of real estate in a market where there's no supply and increasing demand, you simply want to keep that property, extract value, extract as much as you can, hold it until the right time and somebody knocks on your door and says, I want to buy that property at a price that makes no sense to you, but if it makes sense to them, you sell it to them. It's precious. It's like buying a Birkin bag at Hermes or buying a D Flawless 14-karat diamond at Cartier. That's our real estate. That's what we deal with. And so we just hold it until somebody ultimately says, I'll pay a number that doesn't make sense.
Excellent job, Lawrence. I also, you started off by saying that real estate is boring. I would disagree with you. I don't think real estate's boring. I know I came from that background as well. I spent 15 years in the industry, and I don't think it's a boring. In fact, institutional investors don't think it's boring either. They put at least 8% of their portfolio in real estate, so it's definitely a part of their investment strategy. It's definitely a part of a lot of investment strategies out there. So insurance companies and pension funds and so forth. But let me get to some other questions here. This one really relates more to leverage. So a question from Meng. When you purchase properties, do you work with banks? In other words, how much equity do you put in? And so are you using leverage or financing to structure these deals as well?
Well, yes, it's a very good question. And the amount of money that's borrowed and the price of money and the availability of money are all tied together as applied to the actual asset that's being acquired. And so leverage is a fantastic thing. Without leverage, real estate would not be fun, and without tax benefits, it would not be fun. But the combined of those things is what really drives valuation and ultimately profitability. Right now, money's cheap, but so real estate's expensive, and it's always expensive in our region. So on acquisition, typically, leverage is somewhere in the range of 35 to maybe 50%. That's been historic, at least since 1978. I don't think it's ever going to change. But over time, as real estate in the portfolio grows in value because of increased net operating income, if interest rates are flexible, beneficially reduced from what your existing debt is, we have fantastic long-term relationships with lenders. So what we do is we stay with our lenders. We're a K-Reg top-tier borrower at Chase, for example. So we're a phone call to Jamie Dimon, that kind of relationship. And so what we do, and remember, lending is a business and it's a two-way street. So lenders make money by putting money out and getting paid interest. And if they have great collateral, which is what we have, that's the holy dream for lenders. So what we do is, we borrow money to buy an asset, and after a few years, that real estate is worth more and the income is higher. The bank will come to us and say, hey, do you want a few more million on that one? And so we use leverage very, very effectively to be able to extract capital on a non-taxable basis so we can distribute it to our investors.
Excellent. Lawrence, I have another question here coming in from Anonymous. And I think I've heard you talk about this too before. We all talk about in real estate, it's about location, location, location. And I've heard you talk before about timing, timing, timing. And now we have a question from the attendees. It's anonymous that says, how are you finding these opportunities? Are you in the money from day one when you find these, or do you have some value add approach?
Well, actually, in this firm, we discount the term value add. Value add to us implies buy it at retail and figure out a way to make it worth more money. Our strategy and our philosophy is we're a value bot. If there isn't a death, a divorce, a bankruptcy, a partnership dissolution, or some other material stress where we can buy a property at least 20% below our estimate of market value, we don't even buy it. And the reason to buy it in the money is we can't control markets. And so if we're in the money by 20% and the market goes down 20%, at least we still have our equity. So that should be a pretty direct answer.
Excellent. Thanks, Lawrence. So we have some other questions here too, maybe more about the history of Christina and how many transactions have you executed? What's your average size on a transaction on a building purchase?
Well, historically, we've completed hundreds of transactions on the west side. We could send a map out, would be just cluttered with flags on properties and projects that we've owned. We were the largest owners of Westwood Village, south of UCLA. We created the Montana Avenue Shopping District. We were the largest owners of retail in South Beverly Hills. We've owned massive amounts of high-end apartments. So, in terms of our track record and experience, we have a certain velocity, but people call us to buy their property more than we're dealing with, looking to buy things. Deals come to us. We just got off the phone with a fantastic opportunity on a deal where a foreign investor is unable to get their money to the U.S. to close, and we're going to pick this deal up that earns a current 12% cash-on-cash return, and if we do it. So deals come to us because of our longevity and our status and our reputation in the industry here, focused exclusively on the west side.
Excellent. I think we have time for one more question, and it really relates to appropriate for timing of where we are in the market today because of COVID. And so how does COVID affect your revenue streams on these properties, or is there any effect of COVID to your portfolio?
Absolutely. Absolutely, there's an effect, because right now it's very challenging to rent for two reasons. One, demand is down because offices and businesses are just closed. All of our office buildings on the west side are completely empty. People are working from home. And if people don't need to be near the office, they don't need to rent apartments. So number two is retail. Retail stores are ordered closed since March off and on. They're hurting and they're unable to pay rent. And under the current emergency moratoriums here, tenants don't have to pay rent. All they have to do is throw their arms up in the air and say, COVID-19, I can't pay. You cannot raise rents under the emergency ordinance. You cannot evict tenants for any real reason under the ordinance. So yes, there's a material effect. How is it affecting our portfolio? Yeah, not so bad, because we have longer-term tenant relationships on our portfolio. On one particular massive property that we own, we wanted the tenants to leave sooner than their leases expired because we're doing a full project renovation on one of the most exclusive resident or retail streets. So we're having effects, mostly positive, some negative. And what we choose to do in this marketplace is not rent to new tenants during the moratorium, because we're not stupid enough to take the risk of allowing a tenant to move in and the very next day say, COVID-19, I don't have to pay. So you have a lot of stress in the system. You have a lot of people that are impacted, and you have a lot of gamers. And our real estate's just too valuable. We have apartment units that are worth $1 million a unit. For $1 million, I could buy 500 units in like Houston. So we're not stupid. We're not going to give $1 million unit to somebody that's going to pay $4,500 a month and then not pay us the next month. And we're very, very substantially liquid, and we have tremendous access to capital and debt and short-term debt to finance ourselves. So we're just kind of hanging out and letting the cloud pass over us. So, but in the meantime, there are others that are experiencing distress, and we're hoping, not negatively, we don't want them to lose their properties, but we have relationships with a dozen banks that have a footprint in the West Side, and we're watching all those deferrals. And sooner or later, the federal government's going to smack these banks, and they're going to have to call those loans in. And we'll be right there if it's a good deal.
Excellent. Thank you, Mr. Lawrence Taylor, again, for giving us this presentation on Christina. Again, I remind you, if you want to network and meet Lawrence and the rest of the Christina team, they will be available in networking. I will provide a link in the chat shortly. And just a reminder for the link to that meeting, don't click on it too soon because you'll leave the webinar and you'll join the networking. So stay tuned for that. And there is a poll that is up. We've got the survey. We were asking you some questions about how we're doing. Again, thank you, Lawrence. And we have our next speaker who is Jeff Ullman. He's the CEO for Good4. And Good4's breakthrough in pain products are superior to other pain topicals. They work to relieve aches, pains in seconds that last longer, and are less expensive. They're so extraordinary and good for pain relief that the company guarantees their effectiveness or a double your money back guarantee. As they're good for health, they're better for investors. They have global trademarks. I don't want to steal all of your thunder. I actually do have on my desk one of your products. And so I want to turn it over to you, Jeff Ullman. It's all yours.
Thank you. Everybody can hear me okay?
Can hear you. You're good.
Great. Well, thank you. Thank you, Tim. I appreciate the time that all of you who are watching are taking today to find an investment opportunity that makes sense by making dollars. Lots of them, obviously. And I'll introduce you today to the reality of wealth care and healthcare, because it's good for you and for your family and everybody else. Because when healthcare and wealth care are done ethically and effectively, they go together when they give people what they need and what's good for them. Everybody knows people in pain. And it's anyone, it's everywhere, anywhere, it's anytime, it's everywhere, it's endless, and it doesn't stop. Good4 creates, manufactures, and sells near pharmaceutical grade pain relief, topicals, and oral tinctures. Now, people, how big is the market? People pay to stop their pain. It's over $100 billion and fast growing, unfortunately. USA market. It's a $1+ trillion global market. but our focus is more narrow. It's the $2.5 billion and very fast growing pain topical market. And pain is evergreen. It's acute. You fall down, you hurt yourself, you heal one way or another, slow or fast. Or you have chronic pain, which lasts a long time, maybe your entire life. Our motivation started personally, healthcare and wealth care. It's very personal to me, the whole subject of pain, because in 2016, some people and several companies started to make a great deal of money from our family when my wife of more than a quarter century was diagnosed with metastatic stage 4 breast cancer and given just 6 months to live. So about 4 years ago today, about 60 months ago or so. Yet today she's the healthiest person I know. But we're not here today to talk about treating or curing cancer or death. We're here to talk about something that's arguably a lot worse. And that's a lifetime of pain and suffering and how to deal with that. Customers or anybody, children, elderly, everyone, no matter where we live, have one thing on our mind when in pain. Stop it, and stop it now. But how? What do you trust? Who do you trust? So you ask yourself, what's good for me and my family? Why should I believe you? You're a company, you're a person. But where can I get it now if it's any good? Good for is our registered trademark, and we're ready to demonstrate immediate benefits to investors. This is the team bringing gain to pain. These are our milestones. In 2019, we formed our company. We did something quite controversial. There's two choices when launching a CBD company in particular, which is to go out and just sell it, make all kinds of claims. Oh, it's great. Oh, it's good for you. Oh, it works fast. Oh, it does this. Oh, it's inexpensive, or it's expensive and exclusive. We chose not to take that method. We chose to prove everything first. So we did an extensive amount of product testing and market research. We began to register with the FDA and follow all the rules and regulations, because our attitude is this, and our commitment is, if we take you as an investor, if you join us, we're responsible to you in many financial, legal, but also ethical ways. So we need to know ourselves. We need to have the look in the mirror, come to Jesus, if you will, type of understanding among our executive team. Are we ready to go? Are we ready to accept other people's money? And the answer is yes. And as you can see from looking at this, we're taking a more scientific approach. Now, we are in revenue, so we know all about that. We also give a 100% happiness guarantee, which means if you try our product, whether it's our pain topicals or our oral products, and for any reason you don't like it, of course we want to know why, and we'll ask you why, but you don't have to answer. We'll give you all your money back, including tax. But that hasn't happened. Why? Our products are good for you. So this is why we can grow quickly. We have the best pain products. Now, best is one of those superlatives, sale puffery words that when someone says we're the best or we're number one or anything like that, you say, yeah, show, prove it. So here's my challenge to you. Don't even buy our product. Ask for a sample. We'll send it to you free. No postage. You don't pay anything. You don't sign a contract. You don't give us your credit card. You just let us know who you are and your physical address, and we'll send it to you. And at the end of this, I'll give you a URL where you can do that. Now, we also have a brand name that is, well, unique. No attorney thought we could get it because the words good and for, they're a little common. We all say good for every day in one way or another. And we were able to obtain this trademark, not only in one trademark class in the US, but in multiple other countries, which helps us establish a global footprint. Because we think, we can't say we know, We can't be arrogant. That good for, when placed in front of almost any healthcare need or consumer need, goods or service, can be very good for investors. And what we say is, don't even take our word for it. Whether we're best, good, gooder, goodest, try it yourself. You can go to our website, goodforit.us, not .com, and you can read almost 200 testimonials from people from around the world, mostly the United States and Canada, who have bought our products. These are from verified buyers. They're not family or friends. Well, some may be, but they bought the product. And this is how we've earned our great results. Proof, lots of proof, customer experiences, customer feedback validated that the product works, and our marketing claims even exceed their expectations. And look at the revenue results. We're not claiming we've sold $1 million worth of products. We're not. We haven't. We spent our time building a scalable foundation to grow a company as fast as possible because we can handle volume. We've had scientific and legal proof. Safety first, as always, not just one COA, which means a certificate of analysis from an independent third-party lab. But we also have competitive advantages. Now, if you see the word pain on a CBD product, it's probably illegal. It's probably not a legal claim, because to make a claim about pain, like a claim about anxiety or almost any medical condition, the FDA must review your materials. Doesn't mean they have investigated it, but they've reviewed it and they've approved it. Now, these are the products that we have for sale right now. Primarily the topicals, good for pain, comes in two ways: an easy to go, very safe, contaminant-free airless pump, and then good for pain, grab and go. If you take one of these little packets, you run with it, never leave home without it, because you never know when you have pain and you've got to deal with it. We also have, for those who are new to CBD or new to hemp, a 100% USDA certified organic oil. We also, if you want to treat your pets nicely, we have great USDA certified pain oils as well. These are products that we've already formulated. We've done some beta testing. I won't tell you which ones my family and I have tried, but our executive team is quite happy with a number of these products. What are our competitive advantages? Well, we have despite relatively low or modest production, again, our emphasis has been on proving that everything works. Because when we say it's good for pain or good for stress or good for sleep, it darn well better be. We need to exceed your expectations, because over 42% of our revenue comes from word of mouth. So imagine you buying a product saying it's great for your pain, and you give it to someone who you care about, or they buy it and it doesn't work for them. You're going to feel bad. We don't want that to happen. So you can see our various advantages. We have DTC is direct to consumer. So we sell currently one place, goodfor.us. Soon it'll be wholesale many places, primarily online. We have a clinical trial coming up starting in about a week and a half. And that will prove, like the Pepsi Coke test, challenge of the last century, we will prove that we have superior efficacy, works faster, lasts longer, does not interfere with any pharmaceuticals you may be taking. We have an experienced team. We work very well together. Our design, judge for yourself. Does this stand out? Now, it's not just red for pain. We use some other primary colors, but pain is best described or reflected in red. We don't let the creative art get in the way of the customer finding us. And when the customer finds us, they use us. Financial pro forma. Now, this is our best judgment, our best estimate. We can't guarantee these numbers. We'd be foolish and a fraud if we did. But when you examine what we're going through and what we've already spent money on developing, you'll see that this is a very conservative model. Our expectation, not our promise, is that we will be purchased in the year 2022 or 2023 for many reasons, primarily our intellectual property, both our brand and our formulations. Success. How are we going to succeed? How are we going to grow and exceed expectations just in a couple months? We have a very strong direct-to-consumer e-commerce model. We have many specifics happening. We have just partnered with therunexperience.com, which is the largest running organization in the world. They have more videos on YouTube than anybody else. They have two other small corporate sponsors, a company called Nike, a company called Bose, and Good For. They were pitched by just about every CBD company you can think of. Because when you're running, if you're in pain, you don't run. And you can apply that to virtually any fitness or any sport or any competition or recreation. And we have Good For ambassadors. We have targeted email marketing. But where the real money, the real growth comes in, the wealth care, if you will, is in January, which begins right the first week of January. And you can see the type of retailers, online primarily, that our sales team has targeted. Your investment. It's not equity, it's a promissory note. It's debt. We're raising $250,000 now, more later, but at a much higher valuation and less of a discount. Be a good deal. Won't be nearly as good as now. And you can see the specific terms. $25,000 is the minimum investment. And there's a convertible discount. So later on, when other people are paying $1 for equity, you're paying 80 cents. And then the added benefit, and this is just a freebie, a gimme. You can practically buy anything we have at below wholesale. Why? You'll be a great ambassador for us. Here's how we're going to use our funds. Primarily marketing. Now, it sounds overly simple to say just add money and we'll grow. Because if you don't have smart management, you don't grow. You become a zombie company or you go out of business. That's not us. We are all dedicated. We are all in. Our website can handle huge loads. We automate and integrate our software so we know where leads are coming from, sales, and opportunities. This is further proof of our intellectual property. These are not pending trademarks. These are granted. And we have others that are from other countries. This is how you can reach us. Goodfor.us, not .com, because we're all in this together. And if you want to stop your pain and gain, talk with us. Thank you.
Excellent. Thank you so much, Jeff. As we have some questions coming in, I saw some in the chats. There's some people asking for samples already. So if you go out that you wanted to have samples in the registration, hopefully you've checked that box. If
yes,
not,
I will put it up there very shortly. But if you go to goodfor.us, you won't see the sample request, but I will send that to you. In the meantime, I'll give you my email and you can write me that way. It's simply Jeff, Jeff, at goodfor.us, and we'll send it out tomorrow morning.
Excellent. So we have here also from Paul Bergman, and he actually works with you. So Paul Bergman is a medical doctor. He is an expert in Denver. He's medical director and educator at Good For. So if you have other questions, he is letting us know that you can also contact Paul. Paul, if you just put that in the chat so everyone can see that, and everyone can see your contact info. Again, if you also want to meet with any of the presenters here today, including Jeff, we will have the networking. I'm going to be putting the link soon into the chat so you can join us in the networking. There'll be breakout sessions where you'll be able to network with the companies that presented here today. You'll have an opportunity to ask more questions and meet with them personally. And we also have the poll up that we've asked about how we're doing. And if you can continue to answer the questions on that poll, we're going to have another poll where you get to be judge. Our poll will go up in just a minute here, where you get to be judge about who delivered the best pitch today. I talked about that earlier in the introduction, that there isn't a prize for best pitch, but it is a sense of pride. It's also a sense of validation to the companies that presented here today. So I hope that you'll vote there. The panelists aren't allowed to vote, so they don't actually get to vote for themselves. It'll be up to you, the audience, the attendees, and you'll be the ones telling us who did the best job here today. And we'll give them that feedback as well. So I'm going to keep that poll open. Let's have a couple of more questions here I'm looking at some of the questions that came in, Jeff. Jeff, how do you see your product? How will it shape the market in the next 5 years?
Well, it'll be good for everybody. The most important thing, wealth comes from exceeding expectations. Now, I once had a company called Great Expectations, video dating. I helped more single people meet, date, and marry than anybody in the world, by far. So I understand what's in people's hearts, but when you're in pain, it takes all your attention. And the people who love you, who surround you, whether it's at home, your friends, your clubs, your work, they feel it too. So good for pain products, they prove themselves. They either works for you, it's either good for you, or it's not. So this is an easy, fast demonstration. And when people try samples, they have no further obligation. They can't promise that one application will stop them from hurting. Plus, when you put good for in front of just about anything, a product or a service, the customer understands what to expect. And when there's a money-back guarantee, no goofing around, well, that helps establish integrity and trust. We're all about trust and efficiency, effectiveness. We do not want you or your family to suffer. So that is why we have such a high word of mouth referral rate.
Excellent, Jeff. There's a question came in. I remind you, if you have a question, there's the Q&A at the bottom of your app in Zoom. You can use that. That's how we see your questions. I'm scanning the chat as well, and I see a question in the chat. Question, Jeff, is...
Pardon me, I also put the URL for samples to everybody, panelists and attendees.
Thank you, Jeff. The question here, Jeff, is do you plan to sell any edible or beverage products once the FDA loosens some of their restrictions?
No, not right now. Let other people do that. Our focus is on pain, physical pain, and psychological and emotional pain. How many people can't sleep? Or they can't get to sleep or can't fall back to sleep? We've got a product for that. How about stress? You think that might cause pain? Of course. Sex, that causes pain, creates pleasure too. We have that as well. We also have we will have good for arthritis, which is specifically for joints. We will have a pain topical for the face. So it won't have the same ingredients. It won't have too much menthol. Incidentally, when people smell or look at a product, their assumption is oftentimes not correct. Oh, it's a Bengay product or a Tiger Balm or one of those menthol products. Nope. That's just one of quite a few of 26 different ingredients. All of them are organically derived synthetics.
Excellent. So I'm going to end this survey that we have now. I would encourage you, I'm going to give you 1 more minute to complete the survey poll before I launch the best presentation poll. So I'll give you 1 more minute to have your chance to answer the questions in there so that I can end that. So if you haven't had a chance to get your answers in the survey, please do so now as you're an attendee. I'm going to also be putting right now the link to, don't leave yet, but I'm going to be putting the link to the meeting, which will be our network meeting that's following this. I'm still scanning for questions for Jeff. And as I'm doing that, the networking meeting, I'm going to be putting that in the link to that. Jeff, is there something else that you wanted to mention to the audience? Let's talk about pain. It's a pretty big market, isn't it? Isn't pain a pretty large?
The pain market, as I indicated, is a multi-trillion-dollar a year global market. It's a $100 billion plus USA market, but our focus is on a fraction of it, which is multi-billion. It's $2.5 billion now and growing. And I will say this, that our product has CBD in it. It also has 500 other cannabinoid, flavonoid, terpenoid elements in it. It's not a CBD product. It has it in it. It's not the active ingredients. So our claims are not about CBD. No CBD product other than one approved by the FDA for specific types of rare forms of epilepsy. None of them can make claims about pain or diseases unless they apply through the FDA.
Excellent. Well, thank you for your presentation. Our time is up. I did put the networking link there. Someone has followed that with another link to Forbes, but to look up in the chat just above that and you'll see the networking link. Don't join it yet. Don't click on it yet. You're going to leave this meeting, going to leave this webinar, going to miss all the goodies at the end. Do click on that when we're just about ready to end here. I am ending the poll now. We're ending that poll and we'll put the best presentation poll up. And that poll has just been launched. It's really simple. For those that were wondering, Element Apothic was not able to join us today. She would have done a fantastic job. Unfortunately, she was unable to attend today due to health reasons. And we really think that that's really more important than anything else, is to take care of your health. So my suggestion to her was to take care of her health. And let's talk about it some other time. And I see, but I'm looking at the polls that are coming in, and some people are still saying she gave the best presentation today. So, and I think that when you do, when you're just a human, that can in itself be a part of your presentation. First impressions are important. And so she was just human today. And so I want to encourage you to vote for who you feel gave the best presentation here today. And I want to thank you all for hanging on and staying with us throughout the presentation. I know sometimes these can get lengthy. We had a lot of presentations today. We had longer presentations than some other some other platforms. We also had longer presentations than we've had in the past. We wanted to give more opportunity for you to be able to interact with these companies so that you could get some questions answered about what you want to know about the companies, what's going to help you make the decision on whether or not you want to move forward with this company, whether it's to own their product or it's to make an investment with them. So I'm glad you got the opportunity here today to hear more about them and dive in a little bit deeper, and so that you could make a decision and you could make a choice and you could find value. I'm glad you're also finding value in this. I saw in the poll results that over 80% of you have said that you find value in what we're doing. And we simply are doing this as part of an ecosystem. We're doing this to make it so that these companies can showcase and investors can learn about them. We also open this up to industry professionals to learn about companies, maybe potential acquisition targets, things like that. So we have made this for you. We've made this for the companies. We've made this for you, the attendees. So I appreciate you all giving me that feedback, because if we're always trying to improve. If you feel there's something we could improve on, please email me. Send your email to tim@glifecap.com. You can also send it to info@linkedventures.net. If there's something that we can improve on, tell me about it. I'm open to criticism. I certainly am not perfect. So this is something this is for you. We're doing this for you. We do this for you, the attendees. We do this for you, the companies. Thank you to everyone who had a chance to present here today. Thank you for bringing in your votes. I'd like to see that get to 70% of the audience. So please vote if you have not voted yet. We're not there yet, so I need some more votes. I need you to tell me who did the best. Who did you like? Was it Deep Roots with craft cannabis? Was it E-Bumps with disrupting the advertising space? Was it Element Apothic for just being a human? Was it Good for helping you understand, helping you with pain relief? Was it Christina, who says it's boring, but I think it's not boring at all? Talks about real estate. Was it Christina? Was real estate what drives you? It's everywhere, but there's not too much more real estate. I mean, I'm looking in Las Vegas, and I drive down the road, and every time I go out of my house, there's some more there's another building, and there's less real estate. Again, was it Deep Roots? Was it E-Bumps? I need you to indicate to me. I need to get that vote up. We're not quite at 70%. So please get it up to 70%, please. Then I will stop talking and we'll get to go to the networking. So I'm going to post these results so you can all see them. So please put in, I just need maybe 2 or 3, maybe 4 votes. That's maybe all we need to get to that 70%. If we can get to 75, get me there. But was it Deep Roots, craft cannabis? Was it E-Bumps, advertising technology? Was it Good for with pain relief, topical pain relief, and other products? Was it Christina with real estate? Who was your favorite here today? I'm looking at if you're out there in the audience and you're a part of these teams, maybe you need to push one of these teams over. I'm looking at it, and I got close numbers with Deep Roots and Christina. So somebody's got to break this here. Somebody needs to come in. I need like 1 or 2 more votes to tell me who's doing better. But I've got every company doing well here. We're all, Good for you're coming in. You're starting to come in there. People are, oh, there we go. We reached 70. I'll take 75. Give me to 75%, please. This is fun. We like to do this. These companies need to know how you felt, and don't be shy. You can tell us how you felt. Now, if you do want to go ahead and if you've already made your indication and you don't want to wait for the results, go ahead and join that networking meeting. We'll join you over there in a few minutes. We're all still going to stay here. We're waiting for these results. There we go. We're there. Thank you so much. You got me up to almost 80%, so we're ending the polls. And here we go. You all can see it. Deep Roots. Congratulations, Mike. You gave the best presentation according to our attendees today. And Christina did very well, came in very close there. Good for you also right there. right there, came in very close. E-bumps, we'll come back. We'll talk about this. And Davina, who's not here today with Element, you still had people who understand what it's like to be a human. All right, that's the poll results. I'm going to stop sharing now, and we are going to join the networking. So this is going to end here. I want to thank everyone here, all the panelists. I want to thank Vinod, our back behind the scenes. He was taking care of technology. And I want to thank everyone for just the flexibility and your time as attendees. Thank you for registering, and I'll see you in the networking. Also, remember, just if you haven't clicked on that link yet for the networking, copy that from the chat so you can join the networking, because I see some of you still here. Go ahead and copy that. It's in the chat, the networking link. And that there you can join that. So I'm just going to hang out here for just a couple more minutes as we do that, and we're off.